Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to Mr. Alex Talcott today. Alex is
Wealth
based...
matters.
Yes, thank you. So Alex is JD is a founder and partner of Lexdan LLC, a real estate private capital company with resident doors in 10 different states. Wow, that's crazy, 10. Today, I do want to talk to him about, because he's from New England and I have not been to New England either. And most of my listeners don't know a lot about Northeast markets. So I want to dig deep in New England market, as well as talk about everything else he's doing. So welcome, Alex.
Thank you so much. Yeah, I'm really glad to talk with you about New England. I met my wife in New England when I was 18 years old. We named our son after a New England college town where we met. So we have a lot of love for New England.
Wow.
But I don't always zig when people zag. We absolutely have investments in the South. I'm speaking with you today from a hotel room in Kansas City, Missouri. But we have maybe a little bit of an interesting story about what we're doing, not only in New England, but in northern New England, where housing stock is old and it's cold.
Okay, I do want to know about that. So let's talk about something funny. Tell us something interesting or strange about yourself.
Something interesting or strange about myself. So for somebody who's such like a private sector entrepreneur, I've been very at home in the public sector. I teach at a state university. I recently completed my 10th year of college teaching.
Wow.
And I started teaching when I was in my 20s at the university level. And I've had students as old as their mid 80s.
That's crazy. Because you have been teaching for 10 years. You have been living in northern New England. How and when did you start investing in real estate?
Yeah, so I started out in real estate law maybe this summer after my first year of law school. There was one partner at the mid-sized firm that I was with who had a real estate practice, and it was really involved with local government issues like zoning. And I've always been a political geek, so I really enjoyed that. But I wouldn't say that I really started investing in real estate private equity until summer of 2019. It was at that point that, without predicting the imminent demise or crash of the stock market, I was in a position to repurpose some assets. And I also saw that I had the chops to do a full-fledged company, not just have a sleeve of investments in real estate. So it's really been 2 years of concerted residential real estate investing and building a real estate investment company at the same time.
That's great. So let's talk about your very first investment. What was it? Where was it? And what did you do with it?
Yeah, I'm going to go ahead and call it the law of the first deal. Yeah. Where it's hard to think of the first one without thinking the second one. So my partner, Daniel Barley, who's an outstanding real estate attorney in New Jersey, had an 8.5-year head start on me in investing in predominantly single family homes in Birmingham, right, Alabama, which is a market I know you like.
Yes, I love Birmingham.
Yeah. And so he's there. He's also in Ohio, Jersey, Indiana, but Alabama was his spot. And so he had access in a very good working relationship with a turnkey operator there. We went in 50-50 on a house cash together. And by the time we were about to name the LLC, rather than name it 123 Main Street, we were kind of like, you know what, for a house this inexpensive, even though I'm a lawyer and I'm prudent, not every little home has to maybe be in its own LLC, is my unofficial, not legal advice. But so, we decided to come up with a name that was a little bit more common to the idea that there might be more deals coming behind it. So that first cash property in Birmingham was very quickly followed by another cash purchase in the same market that's held in the same entity to this day.
Wow. So what was that first property? It was a single family house? And
yeah, it was classic Birmingham, Alabama, man.
Right, exactly.
It was like 3-bed, 1-bath. And
do you still own it?
Absolutely. Yeah, okay. Yeah. I'm a buy and hold person. Like, okay, other than some of my limited partnership investments in business plans that are the 5 to 10 year apartment syndication, best case scenario in a property, not that I'm stubborn in holding on to properties, we're that lazy about unwinding interests. But I mean, I think we have to say as a matter of logic that best case scenario is that you hold something, that
Yeah.
there's not reason to get rid of it. So it's like, that's the presumption for me.
Yeah, you are right. I'm also buy and hold person, and I look at it as real estate is an illiquid investment, right? The whole purpose of you're building real estate empire or whatever is that you want to get cash flow, right? It's when you get
Absolutely.
started, the first year or so, usually it's always been stabilizing the property. You're already paying the highest interest, right? If you look at the amortization calculator, even if, of course, you bought it in cash,
Right.
but the first 5 years you pay a lot more interest upfront, right? Then, so if you don't keep it for 5 to 10 years, it's not worth it. My goal is
Yeah,
always
it
on
probably,
average
you and
out
me,
10
as much
years.
as we love Birmingham and its nickname is Magic City, referring to the magical population boom that happened a time ago, it's not as much of an appreciation play. If you're
Right.
doing an appreciation play in Alabama, you might be doing something in Huntsville. If you're even there, you probably have to do development.
Not a lot. Yes, development only. Yeah.
So in Birmingham, it's a cash flow market. It's a recession resistant.
And that's what you need. You have to diversify, right? I always tell people that you have to go with hybrid approach. If you like appreciation, invest in appreciation, but also have some cash flowing properties. So you don't get with your, pants down when the tide turns, right?
Yeah, some people miss the diversification piece, but what I'm finding is perhaps maybe people overly diversify. I don't like the saying dirt is dirt in real estate. There's some dirt in this world that at no price do I want to own a hectare.
Oh, yes. So what kind of assets do you invest in now?
Yeah, one of the things that maybe is weird about us is that we love residential of all sizes. So some people do single family and then graduate to bigger deals once they have a track record with a bank or with an investor group. For a variety of reasons, we still like single family homes. There are some markets that bear that out. So like Birmingham, like Jackson, Mississippi, there are some markets where the housing stock is that the blue collar working class, they live in 2 and 3 bedroom houses on a little bit of land. It's the American dream. And I know my friend with $500 in 2001 knows a little something about the American dream. And the American dream is alive and well in the deep South. And the diversity of people who live in single family homes is a very beautiful thing to see as well. But then there are other markets like Kansas City, where I am right now, where a lot of the housing stock is the mid-size apartment complex. You'll find 12 and 20 units. And then there are other markets, like certain markets in Florida, where maybe you have high-end single-family homes, but then it's the 200 to 400 unit apartments.
Yes, 200
So I like to work with where people are already living and the kind of housing that is familiar to those markets, the people who are already there.
Oh, that's a great advice too. So let's talk about, because you started with Birmingham, Alabama, very first investment, and even the second one. Why did you choose to invest in Northern New England?
Yeah, well, first I had to do stuff other than Birmingham for the good of my partner, because I am so loyal. So my friend, I got into his personal finance a little bit, and I thought he was, maybe a few hurricanes away from a bad situation.
Ooh.
So he actually needed more diversification for his personal portfolio. And that's what led me to introducing to him to some apartment syndication opportunities in Florida and North Carolina, were the places that we went after Alabama. But then in terms of the Northern New England thing, it was actually at a law conference last summer. I was in West Virginia. I was working up bids on a property in Independence, Missouri, and I'm on my way to Independence in an hour. We got outbid big time. And this was a little house. And the listing agent said, the secret's out on Independence, Missouri. And not that I don't love Independence, not that I don't love, our friend Colin at Atlas Property Management, but I'm sorry, the secret's out on Independence, Missouri. It's not that much of, a big time skyrocketing market. It reminded me too much of the story of Joe Kennedy getting a stock tip from his shoeshine boy before the 1929 crash. And I was kind of like, ooh, are some of these markets a little bit expensive? So that led me to look in my own backyard, broadly defined of my home state, to recircle the wagons with some of my contacts who are realtors and civic folk, to see if there were not markets in my own home state that fit our business model. And we found cash flowing opportunities in an old mill town, one of our only 7 cities in the state, called Berlin. And yes, we pronounce it Berlin, not Berlin in New Hampshire. And if the price is right, you can find small multifamilies and just do pretty fundamental business management and cash flow pretty nicely. So Berlin was our first of now 3 markets where we own property in my own home state, and none of them are my hometown. my hometown is expensive.
So you are in three different markets or three different cities in New England now. In what kind of assets those are?
Yeah, so in Berlin, in the good old paper mill days, you had immigrants from Quebec and even from Germany and other countries that would come to work in mills. And we have the oldest housing stock in the United States. But what's interesting is those aren't all like 18th century antique homes. Some of them are 3-unit places that was workforce housing of the prior century. And some of those have some pretty good bones. And with the cost of lumber and labor, there's some pretty interesting opportunities. And with the populations have stabilized in those places. So if you come in with some energy and some business acumen and you put the right team together, you can take really, really good care of 2 and 3 and 4 unit properties. And we have really good local property management. I have a really good general contractor crew who will come up, and anytime they come up, people come and say, "Oh, let us know when it's ready. We want to live there. Thank you for bringing, some attention to these properties." So I mean, it's very, very rewarding. Berlin also has a historic Catholic community, and I went to Notre Dame Law School. So that really resonates with me. There are a lot of cultural things in just straight up houses or units that are just ready, affordable housing if you take good care of it. So I enjoy doing that in Berlin. In Colebrook, I have a family member who's been involved there, and Colebrook is right very, very close to the Canadian border.
Okay.
Both Colebrook and Berlin are increasingly popular for ATVing and snowmobiling activities.
Oh, okay.
And then our third market of Conway, New Hampshire is a ski town. And I consider it our gateway to the North Country property, where we're going to have some multifamily tenants, but we're also going to reserve 1 unit as a base of operations and some storage and some overnight crash pad for our Opportunity Funds of New England entity. So specifically, Opportunity Fund business is going to be based out of an Opportunity Zone property in Conway, New Hampshire.
That's awesome. Let me talk to you about something which I always think about when I'm looking at an older property, and now I don't buy older property. But what kind of issues or horror stories have you seen with older property? I'm pretty sure they have good bonds, because I can actually tell the difference between even just going back home and all, that a property which was constructed 100 plus years ago is in much better shape overall. But what do you see with HVAC?
Yeah, I mean, they vary. And if you work with a listing agent who's like all rose-colored glasses, sometimes they say it's got good bones, as like when you say that a chubby kid is big boned. It's like not always true. So just because something is old and has lasted doesn't mean that it's in great shape.
Right.
It just happens to be the case that we look at the foundation that's in better shape than some people might think. There are other times. We were recently looking at properties in Franklin, New Hampshire, and based on the age of the property, we thought that there might be some asbestos issues. We actually found none in the 3 showings that we had there. So you want to be on the lookout for certain things. But, at this point, lead paint is something that we're just like so very used to. The remediation can be done, and there's a bit of an awareness of it at this point, because that period of the 1970s, it's been a long time. Like we've known to be on the lookout for a while. We know how to do radon tests if we got to do it. And that's one thing that we have. You want to be mindful of radon maybe also, because a lot of our basements are still dirt. So maybe a little bit on the lookout for that. But I mean, inspections by a really good certified inspector.
That's the key.
I mean, they're great.
So have you seen any plumbing or electrical or HVAC issues?
I mean, yeah, so sometimes you see some old knob and tube, but that before you get there, you spot it when you get there. And believe me, it's not that easy to get an affordable, competent, responsive electrician anywhere. But I mean, no sorts of really strange stuff. So it's like, just because we're New England, it's not like, oh yeah, there was a witch trial in the backyard and it did a lot of fire damage. It may look like a fire pit, but there are ghosts there.
Yeah.
I mean, if our properties are a little haunted, they're happy ghosts. New England's a fun, beautiful place.
They're Caspers.
Yeah, Casper the Friendly Ghost, right.
So how does investing in Northern East or Northern New England work compared to the other parts of the country now that you invest in 10 different states?
Yeah.
What differences you see, or what do you keep in mind?
You want to be on the lookout for utility costs, property taxes, and political risk. So first, to utilities. There are many parts of Northern New Hampshire. We think of New Hampshire as this live free or die, very frugal kind of a state. But not everything is cheaper in New Hampshire than it is in New York. Electricity in upstate New York is cheaper than it is in upstate New Hampshire. So you want to be on the lookout for that. You want to be on the lookout if you have city water as opposed to well water. Sometimes water bills can be kind of expensive. Also, New Hampshire is decidedly low tax. We have no state income tax. We have no sales tax, rather, and property taxes vary widely. And it's not always the case that it's the fancy municipalities that want to keep low taxes because they don't really want to fund public schools or public things for other people. They just want to disappear to their estates. And it's not always the case that the highest property tax places are the very progressive liberal towns or the towns that maybe have high rates of poverty. They vary very, very widely. In Massachusetts or New Hampshire, what we call a town or a city, you would have to conglomerate 7 or 12 somewhere else for it to be a municipality. And so you have to look very, very closely at adjacent communities for what the property taxes are when you're doing your underwriting. And then on the political risk side, that certainly applies to what you're going to do with the property. What is the culture of support or lack thereof for short-term rentals, for example? Because that varies very, very widely town to town.
And is New England landlord friendly or tenant friendly?
It's somewhere in between.
Oh, okay.
And I always use that as a little bit of a threat. So I'm like very, very, by being involved in the states that I'm in, I get to let folks know it's like New England and New Hampshire specifically is not Alabama, is not Mississippi, but it's not Chicago, where
it's
I first
not California.
It's somewhere in between. And so where it is in that in-between land for like how competitive is New Hampshire as compared to Missouri or Kansas, where I am on this trip, that's something that I get to speak to elected officials and other policy workers and leaders about. Sometimes politicians say, well, when I talk to the people, the business community tells me they need this or that to be competitive. Sometimes those politicians are lying. They're just giving their opinion and pretending that somebody.
Sometimes.
Yeah, right.
Sometimes.
Right. Sometimes. But sometimes there really are people. Sometimes there really are people, because I am one of those business leaders. I'm one of two people in the private sector on the governor of New Hampshire's housing council.
Oh, okay.
So in that community where it can be a bit of an echo chamber, there's one other property manager and developer and myself who are there. So they can at least say, hey, I talked to a real person in the private sector. These are their views on carrots and sticks. So I would say that New Hampshire is somewhere in between. It helps that the governor's emergency order is expiring today.
Yes.
Because the council that I serve on was starting to go into certain tenant protections that were maybe contrary to contract right. There was over 85% support for suspending late payments or late fees on rent payment. And I'm not even sure that would hold up in a court of law, because some of those are by contract.
Yes.
So advising the governor to do some executive order that would be contrary to private contract right, I don't think that really would have been enforceable, and I would have fought that wearing my legal hat. But even the fact that committee members were talking about that, I started warning some of my friends, that's a little bit unfriendly. I'm not going to say I'm going to run to the lowest common denominator, but it's a little bit closer to Chicago than it is to South Dakota and other free states in this land.
Right. Hey, so can you share numbers on one of your acquisitions in northern New England? What did you pay for? What are the expenses, and what's your cash flow?
I might be a little bit more coy on that than some of your other guests and some of the guests on Dan Hanford's show, where he goes through some of the numbers. But what I will say is, in terms of a cost per door and maybe a revisitation of the 1% rule, I'd be glad to comment on that. So in New Hampshire, even in some places that are sub 50,000, sub 30,000 communities, that might look pretty comparable, where I mentioned that the property taxes might vary very widely. It also varies widely in terms of cost per door on multifamilies there. And there may be multiples difference. There are towns that look eerily similar, where right now in today's market, you got to do 65 to 85 per door. But then there are other communities that really do look very comparable, where 35 to 60 is decidedly doable.
Wow.
And the rents aren't always in proportion. So you got to underwrite each deal individually is really important. Off market is very helpful. The next cost per door that we're going to close on in New Hampshire is 35 per door on a 6 unit. And I'm hoping for 34 a door on another 6 unit.
And so what kind of rent would you get on that 35 a door?
We would underwrite it as 500, but as a practical matter, anywhere from 625 to 775 is possible.
Oh, wow. Okay.
So to that point of the 1% or the 2% rule, if you do it as a job, not just as a hobby or an investment, I think you have to significantly beat that. One of the things that keeps me coming back to turnkey opportunities in Birmingham is based on what we have on the ground, 1.2% is still doable all day long.
Yes, I agree.
So the higher property taxes in a place like Berlin, however, I think you got to be pushing for as high as 3% rule though.
Oh my God.
I'm serious. With some of those water bills and some of those property taxes and some of those other things, that's what you got to go for.
Hey, so another question I have about Northeast, do you see any issues on these properties because of extreme cold weather?
No, quite the opposite. We have 3 investments in Texas. And when Texas had their freeze recently, we had pipes burst in all 3 properties.
Oh, wow.
And I had pipes burst in 0 of my New England properties because they're just built in response to it. So I guess maybe circling back to the theme of diversification, rather than chasing those very high costs of entry to a market like Austin, Texas right now, you might be better suited because, they say, what happens if hell freezes over? Well, I think Texas is God's country, but it froze over. Right. So if it can happen in Texas, there are certain known unknowns about real estate investments. So I would say one argument for maybe considering expanding your investments to outside of the South and the Midwest would be just that maybe some of our properties are well suited to withstand different things. So it's a geographic hedge, it's a weather hedge, it's a climate change hedge.
Oh, that's interesting. And that when you mentioned Austin and even Dallas to a certain extent, right? A lot of my friends and investors now reaching out to me. Do you have something in Austin and Dallas?
Nobody invests in Dallas. You maybe still invest in Austin, but it's Dallas, Fort Worth. Yeah, it's Dallas, Fort Worth. And at least Fort Worth, by its last election, is going to still have some good fiscal management. But what we're really talking about at this point is like Arlington, Frisco.
Yes. And even that's pretty much done. You can barely find any deal. It's like what you mentioned about independence. It's already in the news. You should get in 4 or 5 years ago in Austin, Dallas, Arlington, Frisco, because it's already late.
That is true. It's been a while since my inbox was hit with an opportunity to give somebody money for something there.
Exactly. So, no, that's great. How do you analyze your investment when you are looking at a deal? What all do you go through?
Yeah, I have certain unfair advantages there. So I teach, in addition to business law, I teach finance at the undergraduate and the MBA level at the University of New Hampshire.
So you have an unfair advantage. You got a law degree. You teach the political side. You are connected with politics. You have finance side. Wow.
Yeah. No, I anything to get out of the chores in my old house in New Hampshire, because there is maintenance that goes into my 1863 home that I like to avoid at all costs. Sorry, honey, if you're listening. But yeah, so teaching at the university not only gives me regular experience with financial management and analysis, but I also get to scout talent. So we've been able to build out our team. So I have former classroom students of mine. I'm thinking about one who was actually the last person I was in touch with before I joined you, who was a classroom student of mine maybe 4 years ago at this point. He works for one of the big 4 accounting firms.
Okay.
And so he has that level of chops. So if I'm busy on the road and I have some properties to underwrite, he's somebody who part-time will do that. And so I involve a number of part-time analysts on my team. And a lot of them have very, very strong analytical competencies. Yes. So have we tried out different underwriting calculators and spreadsheets? Have we modified some? Yeah, we're always looking, we're always tweaking that. But what it really comes down to is reliable individuals who, in a moment's notice, when something catches my eye or my partner's eye, we can have a really quick number crunch such that we can actually get an offer out there in a timely manner.
That's
people
great.
Power.
Totally makes sense. What has been your best real estate deal so far?
It could be one in Kansas City that I just got. We have a very small role beyond a limited partner on it. We did a little bit extra on that deal. And I just received a notification from some of the general partners on it yesterday that we would be expecting a larger than normal distribution. And boom, when that thing popped, that was nice. So far on the numbers alone, in terms of a very quick and fruitful return, it may be that deal, which is a 26 unit deal that we're very grateful to FTW Investments for running point on.
Oh, that's great. Can you share a worst deal or horror story?
A worst deal or a horror story. I can think of our most difficult tenant right now, and I had to file a police report on him the second time I went up to the property. The first or second time I was at the property, I wasn't able to get into his unit during the inspection because he was so inebriated that it would have been dangerous and inappropriate to have people go in. And I can give it, but I can't take it. Like, I'm a native New Yorker. You can probably tell, before I made it to New England, I was from New York. I'm loud. I talk fast. I can bust it and I can give it. I can't always take it. And when my good deeds go punished, it's hard for me to let that roll off. So that tenant being so demanding and so unreasonable, it still hurt me because I volunteer so much of my time on affordable housing causes. I'm straight up, like, so totally one of the good guys, the real estate business. Like, I really was. You mentioned you don't like to talk about religion and politics, but I'm a college religion major who's really involved in politics. And then I went to a Catholic law school. So business ethics is really, really important to me. And so just the amount of somebody else's, I prayed for that person. That person's having a tough go of their life. But the projection and some of the language and one of the threats, frankly, physical threats against me that was made when I was up there was just absolutely so uncalled for that I had to talk with a number of friends to just have that confirmation, that validation that, there's a lot of mind that goes into our work, but there's an awful lot of heart and soul as well. Yes. And that really hurt me. So it's really that one tenant hurt my feelings.
Oh, I can tell. Yeah. And I have the same thing, right? I'm all about having, the honesty, the business ethics, because in the end, all of us want to make money, but not by hook or crook, right? You want to do good, right? You want to make an impact in the communities you are investing in, be it single family, multifamily, mobile home park. Right.
Yeah, I was very fortunate. Some of our on-the-ground property management are long-standing people who know everybody in the community. The local police are extremely professional and supportive and understand that where they're certainly not a gentrifying market. It is people largely like to be left alone, have inexpensive housing and access to views and recreation. That's what it's about. So we're not trying to do anything very great, but we're certainly trying to do something that's very good.
That's awesome. Let's take a quick break. And after the break, we will go through the same questions I ask every guest.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Alex shared a lot of golden nuggets about Northern New England as well as the other markets he invests in. Alex, are you ready for fire round?
Let's do it.
Would you be changing any business or investment strategy after this pandemic is over?
I will not. One thing is, one of the most common questions we get is, do you do residential or commercial? And sometimes I'll take that as an opportunity to explain to people that commercial financing can be used for residential purposes, but also that what is residential is evolving, right? So there are mixed use properties, there are trends of new localism. So I will be looking maybe at some properties that currently have first floor retail to see if we want to keep that retail vibrant on the main streets of communities and maybe squeeze in a little bit of residential in the first floor back. So I have some financing ideas and some local zoning cooperation plans that might be very helpful in terms of a few birds, stone, that thing, in terms of the integrity of retail and residential. So I might be on the lookout for that slightly, but things have been going well. Tenants have been paying their rent.
That's great. Favorite real estate or finance or any other related book?
For me, it's not specific to the real estate industry, but Dan Sullivan's Always Be the Buyer has helped me. I don't really like to sell people on my ideas. We don't syndicate. We're going to start syndicating in 2022. So I'm really not selling. I've done some selling and business development in prior roles. So I really just like to buy and do, and people come along. And that book reinforced my instinct to do that.
Any tool or website you recommend?
OpportunityDB.com.
Okay.
OpportunityDB, like database.com. I mean, you can use the HUD governmental website, but as a private website that also has some podcasts and some events and some other platforms. Okay. I enjoy going there to very quickly type in an address and see if it shops up in the blue in the Google Maps type map, which tells me if it's in an opportunity zone
or not. Yeah, I do that all the time, but not with that website. I use the government website, but thank you for sharing. Any advice for beginner investors?
Don't fall in love with any one asset class, because remember, if Robert Kiyosaki and Rich Dad Poor Dad was your gateway to get here, you have to ask yourself, at what point have you stopped listening to him? Because he's been hawking silver for some time. I would never fall in love with the advice or the asset of any one person or any one place. And without over diversifying, one area where you might want to do some really important initial diversification is in tax status. You want to make sure you have tax-free, tax-deferred, and taxable accounts. So it's not just what you're investing in, but what the tax treatment of those accounts are. So for a lot of you listening, for you beginners, you may be Roth IRA eligible. You got to look at Roth IRAs, and what you want to hold in that Roth IRA is probably not and probably cannot be real estate.
That's a great advice, because I just did my Roth IRA and I'm going to be investing in cryptos, which I have been before as well. But because of the tax, I'm moving that into Roth IRA.
Okay.
So I don't have to pay the tax ever. How do you give back?
Yeah, so I like education is huge for me when I'm not doing it professionally as a classroom teacher. I always find myself on boards, whether it's my own children's nursery school parent advisory board, or whether it's my local state university's fan athletic board, or I was on the board of the largest early childhood nonprofit in the state that my children didn't even attend. So I'm a serial investor, but also a serial joiner, which is why I live in New England. If you want to get something done, ask a busy person.
Thank you so much for all the golden nuggets. How can my listeners reach out to you?
I think the best way to get teases, at least of our what's and wheres that we're up to, is to go to check us out on Instagram, which is Lexdan RE. I'm the Alex of Lexdan, and there is indeed a Daniel. So Lexdan RE is our handle on Instagram. And at least for now, the URL agpass.com, AGGPASS.com redirects to our Instagram page. Stay tuned for 2022, where that reference to aggressive passive real estate, which we've trademarked, is actually going to be the way to find out passive ways to invest with us.
It's awesome. Thank you so much, Alex.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!